Hello viewers, welcome to my channel. I'm Hasham. Already I have completed 10 problems on computation of income from other sources. This is the last and final video on problems on income from other sources. So two more problems I'm going to explain you on how to compute the income from other sources by applying the provisions of Income Tax Act 1961 for the assessment year 2021. So already I have completed so many videos on Income Tax Act, introduction part, income from salary, income from house property, profits and gains of business and profession, capital gains, and lastly income from other sources. Income from other sources is a residual head. That means if an income does not fit in the first four heads, then it will be put to tax under income from other sources. So there is no exhaustive list of incomes which are taxable under income from other sources. Any income may come under this head, income from other sources. So I have given the examples of income like interest on securities, interest on bank deposits, hire charges, rental charges by letting out on hire plant, machinery, furniture, subletting, commission, and winning from lottery, casual incomes. All these are examples of incomes which comes under income from other sources. So hope my regular viewers have already watched the earlier videos. If you have not watched, I suggest you to go to the playlist of my channel, select the subject Income Tax 1 for the assessment year 2021. Watch the earlier videos. And one thing, this subject of income tax is a little bit difficult compared to other subjects of accounting. Because the income tax, you have to remember in the number of provisions given by Income Tax Act 1961. So until and unless you have the interest of learning, forget about examination. Enjoy the learning, gaining the knowledge point of view. If you watch the video, definitely for long-term purpose, definitely it will be very, very helpful to you. Otherwise, simply if you want to pass the examination by hook and crook, you can easily get it. But what will happen having only a degree? That doesn't help you in your life. If you want to become successful in life, have the knowledge, in-depth knowledge. So you must have the patience of watching from beginning to end. And don't join in between. If you may maintain continuity of watching the videos, then definitely you will get a lot of confidence. You will get interest, you will get enjoyment in learning. So follow my instructions. Definitely it will help you a lot in gaining the knowledge on Income Tax Act. For the new subscribers, new viewers who have just joined my channel, I suggest you to visit the playlist. I have uploaded so many videos on different topics like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, business statistics, financial management, investment management. So many subjects videos I have uploaded. Select your subject, select the topic, watch the video. Definitely you will gain a lot of knowledge from these videos. Now, before starting the next problem on this income from other sources, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep the problems ready before watching the problems video. Now, this is the 11th problem. See the 11th problem I am reading out. Mr. Sravan's residential status for the previous year is resident and ordinarily resident. Compute his income from interest on security for the current assessment year. Only we have to find out interest on securities. Income from interest on security. In the previous video, I have explained you there's a procedure given how to compute interest on security by the Income Tax Act. Income Tax Act has given the procedure. All the securities are divided into three categories: exempted from tax security, tax-free security, less tax security. Exempted from tax securities are those securities which are specified by Income Tax Act and says that the interest on these securities are completely exempted. Completely exempted, like National Defense Certificate, Post Office Savings Bank Deposit. All these are example list I have given in the introduction part. So watch that video and you can be able to know what are the securities on which income is exempted. Second, tax-free security. The tax-free security are those securities on which the income tax will be paid by the issuing authority. The issuing authority may be government or it may be companies. So on behalf of the investors, on behalf of the security holders, the issuing authority will pay the interest. That is called tax-free security. Now, less tax security are those security on which the issuing authority will deduct the interest, and net interest will be paid to the security holder. The amount deducted, TDS, will be deposited by the issuing authority in the income tax department. These are the three. Now, what is the taxability? For exempted from tax security, should not take it in the computation. We should give a note that this security is fully exempted from tax security, no tax will be applied. Tax-free security. Tax-free security may be government or commercial. If it is a government tax-free security, only one step. GI is equal to face value into rate by 100. Gross interest is equal to face value into rate by 100. Only one step. Which one? Tax-free government security. If it's a tax-free commercial security, two steps. The first step, net interest, face value into rate by 100. Then gross interest, net interest into 100 by 90. Net interest into 100 by 90. These are the two steps. For less tax security, for government less tax or commercial less tax security, only one step. GI is equal to face value into rate by 100. These are the provisions. Now, first one. So here I'm making the computation of income from interest on security of Mr. Sravan for the assessment year. First one, rupees 2 lakh 8.25% tax-free Kerala government securities. So rupees 2 lakh 8.25% tax-free Kerala government security. So specifically given it is a tax-free commercial security, tax-free government security. Tax-free government security. So only one step. GI is equal to face value into rate by 100. What is the face value? 2 lakh. So 2 lakh into 8.25 by 100, 16,500 over. Second one, rupees 7 lakh 20,000, 14% tax-free debentures of Wipro Company Limited. Tax-free debentures of Wipro Company. It's a commercial. It's not a government. It's a commercial. So tax-free commercial security, two steps. So rupees 7 lakh 20,000, 14% tax-free debentures of Wipro Company. First step, net interest. NI. Net interest is equal to face value into rate by 100. 7 lakh 20,000 into 14 by 100. 1 lakh 800. Now gross interest is equal to net interest into 100 by 90. Net interest 1 lakh 800 into 100 by 90. 1 lakh 12,000. Then third one. Rupees 1 lakh 50,000. 10.5% tax-free bonds issued by HUDCO, specifically given by Income Tax Act, the list of securities which are exempted. In that exempted security comes HUDCO. So tax-free bonds issued by HUDCO, it's a fully exempted from tax security. No tax will be calculated, no interest will be calculated. Put a dash. Then rupees 2 lakh 14% secured debentures of Tata Motors. Rupees 2 lakh 14% secured debentures of Tata Motors Limited. If nothing is given, we have to assume less tax. If the word tax free is not given, then we assume it as less tax. For less tax security, only one step. GI is equal to face value into rate by 100, 2 lakh into 14 by 100, 28,000. Next one, rupees 5 lakh 15% Mundra Port Trust bonds. Interest is payable on 1st January and 1st July. Normally interest will be paid semi-annual. That means 2 times a year. The dates are given 1st January, 1st July. We don't require it. Now, it's a less tax. Nothing is given, so we assume it as less tax. So 5 lakh 15% Mundra Port Trust bonds, less tax. GI, only one step. Face value into rate by 100, 75,000. Next one is rupees 50,000, 13% Haryana state government loan. Nothing is given, less tax. Interest is payable on 30th June and 31st December. So again, nothing is given, so we assume it as less tax. Only one step, face value into rate by 100. Next one is rupees 75,000, 12% fixed deposit in Mahesh Cooperative Urban Bank Limited. So deposit in a bank is not a security. Security means bonds issued by government and debentures issued by companies. Only those securities interest will be calculated here. Interest on bank deposit will not come under interest on security. It will be taxable separately under income from other sources. Here I have given the note. Interest on fixed deposit in Mahesh Cooperative Urban Bank Limited is not taxable under the interest on security. It is separately taxable under income from other sources. Simply you have to give a note. Then last one, rupees 1 lakh 14% tax-free debentures of our company limited. So specifically given tax-free debentures of our company means commercial. It's not a government. So 2 steps. First, net interest, NI. Face value into rate by 100. 1 lakh into 14 by 100, 14,000. Gross interest, 14,000 into 100 by 90. That comes to 15,556. Over all the securities we have considered. Now the banker charged 1% gross interest as collection charges. So collection charges are 1% of gross interest. So gross interest, add up all these amounts, you'll get gross interest 253,556. Deduction under section 57. Collection charges 1% of 2,53,556. So 2,536. Interest on loan taken to purchase the tax-free Kerala government security 3,000. So interest paid on loan taken to purchase the security will be allowed as deduction. 3,000 allowed. So total 5,536. Subtract it. 2,48,020. This is the income from interest on securities. That's it. So we have completed 11th problem. Now 12th problem. Mrs. Ria submitted the following particulars to you. Compute the income from other sources. Here we have to calculate all income from other sources. First of all, computation of income from other sources of Mrs. Ria for the assessment year 2021. Winning from lottery. The received winning from lottery is 70,000. Winning from lottery received amount is the net amount. I told you in the previous video introduction part of income from other sources that winning from lottery, if it is given as received, then it is the net amount. We want the gross winning from lottery. So how to find out the gross amount? Net amount into 100 by 70, because 30% is the TDS on winning from lottery. On casual income, the TDS rate is 30%. So issuing authority will deduct 30% and 70% will be paid to the winner. So amount received is only 70%, but we want 100%. So gross winning from lottery will be 70,000 into 100 by 70, 1 lakh rupees. Next, received from agricultural land in England. So already we know agricultural income in India is fully exempted from tax under section 10 subsection 1. Agricultural income in India. Whereas agricultural income received from outside India, it is fully taxable. So here it is received from England. So agricultural received from England is fully taxable. Then rent from subletting the house, rupees 40,000. It is also taxable under income from other sources. Rent from sublet of house 40,000. Less deductions allowed. Repairs 16,000. Rent paid 16,000. Repairs 1,000. So rent paid 16,000. Repairs 1,000 allowed as deduction. So rent from subletting may say deduct these two amounts, 17,000. 23,000 rupees is the rent from subletting, taxable. Then rent from hiring the machinery, rupees 2,000 per month. So rent from hiring the machinery, 2,000 per month into 12, 24,000. Now deductions are allowed. Repairs to the machinery 5,000, depreciation 8,000. 5,000, 8,000, 13,000 deduct. 11,000 rupees is the rent from letting out of machinery. Last and final item, family pension 8,000 per month. The family pension is also taxable under income from other sources. The family pension received is 8,000 per month into 12, 96,000. From this, one deduction is allowed under standard deduction is allowed under section 57(2)(a). The least of the following two amounts. What are the two amounts? 1/3 of the pension received. Pension is received 96,000. So 1/3 of 96,000, 32,000. or fixed ceiling amount given by Income Tax Act 15,000. So whichever is least will be allowed as deduction. 15,000 is least. Deduct it, 81,000 is taxable. Now take the total of the last column, 3,39,000 is the income from other sources. That's all. So these are the 12 problems I have explained you on computing the income from other sources. So if you have watched all these 12 problems from beginning till end with full concentration, and already I told you whenever you are watching the income tax subject, keep a notebook ready. As soon as whatever I am explaining, take a note of it. Write it in your notebook. Then only you can be able to remember for a long period of time. Otherwise, simply without having, just keeping mum and watching the video, seeing the video, listening the video, it doesn't matter. Only 50% knowledge you can get. If you want 100%, keep a notebook, write it down, jot down all the points which I am explaining every time. Then definitely you can enjoy the learning process of the subjects. Sorry. So if you are satisfied with my lecture, if you think that these lectures are increasing your knowledge, if you are satisfied with my lecture, give a like to the video. Share this channel in your groups, in your friends, in your families, so that more students can be able to watch these videos and increase the knowledge. And give your comments on these lectures. And lastly, don't forget to subscribe my channel. In the next video, I'll start a new subject. Till then, goodbye, take care.